Moody's downgraded US credit score. Should you panic? What should you do? Hello everyone, this is Ahmed Saleh. Everything was going fine last week. We had 5 days of market going up and we built on the days before, so everything was going fine. But what happened after the market closure on Friday is that Moody's downgraded the credit score for US from AAA to AA1. The market reacted negatively. The market lost about 1% and we're back to Thursday and Friday closure. This was in the S&P 500 in the SPY, and the same happened in the QQQ, which measures the Nasdaq 100. Few things to consider. First thing, it's okay to have a profit taking. We were going up for quite a few days without any profit taking or any correction, so it's okay to have that. It's good actually to have that so that we can have a base where the stock can gain some power to go up again. Also, one thing that we need to consider that the actions after the trading hours is not necessarily going to be translated in the same action into the regular trading hour, what we call the RTH. So you can see the market going down in the after trading hours, but it reacts normally in the regular trading hours because of the liquidity. So we don't have enough liquidity in the after trading hours or the pre-market to judge the stock market. The real prices will be in the regular trading hours. One more thing to consider, that this is not the first downgrade. The S&P downgraded the US credit score again from AAA to AA2 in August 2011, and Fitch also downgraded the US credit score again from AAA to AA1 in August 2023, and this was just before the bull market that we have seen in 2024. So I gathered here the market reaction in both downgrades that happened before as a reference. So you can see that in August 23, the market was muted, but in August 2011, the market went down sharply. The Treasury was unchanged in 2023. It fell into 2011 because the investors were looking for a safe haven. Also, the gold rallied in 2011 downgrade. So as you can see, the market reaction can be different. So you cannot just draw a conclusion that this will happen when downgrades happen. We have to see what will happen on Monday and next week when the market opens. What I'm advocating for is to have a plan for all the scenarios that can happen. And you have to be ready. It's good that this happened during the weekend so that you are ready when the market opens on Monday. So I've put here like an example of a plan. This is not necessarily what you should do, but I'm showing you a sample of what a plan should look like. So you should have scenarios. The scenarios should be from the worst to the best. So I didn't put here that in the pre-market it will go up because we only take care of the downside. This is our role as a trader in the market. We take care of the downside. The market will take care of the upside. So I classified this in two main categories. What if the stock went down in the pre-market, and if they stayed horizontal in the pre-market, and then in the regular trading hour, if they are going down horizontal or up. So these are the 6 scenarios that I put here. If the pre-market is going down, you sell some. If it continued to go down in the regular trading hour, you sell some as well, or you close your position. In scenario 2, if the pre-market going down, you sell some. If it's horizontal, then you don't do anything. Scenario 3 is going down in the pre-market and then it's going up in the regular trading hours. Then you can sell some in the pre-market and then maybe you can add and initiate new position if started to go up in the regular trading hours. Same thing if the stock was horizontal in the pre-market and then you do nothing, and if it started to go down you sell some, horizontal you do nothing, and going up you add and initiate. What is our reference point when we say that it's going down? Our reference point is not the closing price of Friday. So let's assume, like for example, on Friday the stock closed at $100 and then it went down to 95 in the after trading hours. Your reference is 95, not the 100, because you already took the loss. You are sitting on the loss right now from the 100 to the 95. So the reference point is the 95. If the stock started to go down in the pre-market, then you do this action. And then if the stock started to go down further in the regular trading hour, then you start to do action. But now you already took the loss already. You don't react right now because the market is already reacted and you already took the losses. So the reference point is the close of the extended hour on Friday. Watch out for this. This is very important. A couple of points here that I'm not a big fan of mass plan that if the market went down, I sell everything. It's a stock by stock plan. Why is that? Because some of your stocks will be strong, some will be resilient, some can even go up if the market is going down. So don't have like a mass plan that I will sell everything if the market is going down. No, it's a stock by stock. The scenarios up there is a stock by stock plan. Another one is start with the easy decision. If you want to be safe, for example, and if you have some profit in some stocks, just go out, take your profit and go out. And then you can come back again if the market is showing some resiliency. If you have a break-even stock, just go out. There is nothing wrong in going out if you are making profit or you are break-even. If you have a mild losses like 0.5%, 0.1%, 1%, just go out. There is no need to take more risk. Okay, and of course, if you reach your stop loss, that's an easy decision. You just go out. You respect your stop and go out. Don't have hope, oh, it will come back, it will go up. You just go out and stop. You don't know what will happen. So you just respect your stop loss and go out. Again, the market can surprise you. The market can be positive. The market can go up. The market can go down. The market can do anything. Just be ready with all scenarios and be ready with a plan so you don't panic. If you have a plan, you will not be emotional. You will not be just reacting to what is happening in the market without any rational sense behind it. You will have a plan that you thought over during the weekend, and it's good that this is happening during the weekend. So you have enough time to make the scenarios and make the plan. What will you do in case the market did that or did that in the pre-hour trading and in the regular trading session? That's it for this video. If you like the video, please press like, share it with your friends, and subscribe to the channel. And if you have any question, please email it to the info@thepersonalfinanceacademy.com. This video is for educational purpose only and should not be considered as a financial advice. Any investment you make is at your own risk. Have a nice week, everyone, and enjoy the trade. This was Ahmed Saleh.